Thank you very much, Fernando, for this introduction. Good morning, everybody, or good afternoon. Thank you for your interest in the Grid Parity Monitor series and for attending this webinar. The first slides will only be just a short introduction about Eclarion for those of you who don't know the company. We are a strategy consulting company with a full focus on the new energy market, which includes renewable energy technologies, smart grids, and energy efficiency. In those areas, we cover the following services, which are policy consulting, helping public bodies in the design of their policies in these areas. Strategy consulting, where we help essentially private companies with strategic assignments. We also take care of financial advisory, which includes helping in the deals, buying and selling generation assets, essentially, and also small and medium-sized M&A processes. And we also produce some reports already completed, like this GPM, for example. The main offices of Eclarion are based in Madrid and Berlin, in Spain and Germany, and we also have partner offices through sister companies or agreements with other companies based in India, in Italy, in Colombia, and in Chile. And from these offices, we can cover pretty much all markets worldwide. And the next slide, my colleague Carolina Fondo is going to give you details about the analysis we have conducted in this GPM for the utility scale. Thank you very much.
Well, thank you, David, and thank you, Fernando, for the presentation. And good morning or good afternoon to everybody. Thank you for attending this webinar. Well, the first concept that we have to define in order to present this report is generation parity. Generation parity could be defined as the moment when profitability requirements of PV investors are completely fulfilled with wholesale electricity prices. So in other words, as you can see in the figure below, we have two different situations, the pre-generation parity situation and the post-generation parity situation. The first one, the pre-generation parity, would be when electricity from wholesale markets is cheaper than PV generated electricity. This means that PV sponsors will need support mechanisms in order to invest his money. For example, feed-in tariffs or specific tenders, etc. In the other situation, the post-generation parity, PV generated electricity is cheaper than electricity from wholesale markets, so PV plants could be competitive against conventional technologies. Okay, one moment, please. So one moment. Okay, that's it. Thank you, Fernando. We had a small problem here. Okay, if you have had the opportunity to read our previous GPM reports, and well, if you haven't, they are freely available on the Leonardo website, so I strongly encourage you to read them. As I was saying, if you have read our previous GPM reports, you will be aware that the series analyzes grid and generation parity in several markets. For this specific report, the distinctive features of this issue would be, first of all, the perspective. In this report, we are talking about utility scale segments, so we are considering 50 megawatts using a single axis tracking system. And we are considering also a merchant plant if possible. Also, the markets we have chosen. We have chosen specific spots in Chile, Italy, Mexico, Morocco, Texas, and Turkey. As I have said, we have selected specific spots in order to achieve real irradiation data to be able to model the PV production in each country. And then the most important features of these of this report would be the methodology. We have considered a project finance scheme with a 70% debt ratio. And of course, we have used real market data for EPC prices, and we have modeled the economics of the PV plant, which are P&L and cash flows, in order to achieve a real investor perspective. So as usually, the PV Grid Parity Monitor has been sponsored by renowned international companies. This time we have had the opportunity to share our knowledge with our platinum sponsors, BayBa and Enertis, and also with our gold sponsor, the Spanish company GTM. Of course, we have enjoyed the collaboration of local partners. They would be Acera for Chile, DII for Morocco and Turkey, and then ANES and Atolmex for Mexico. And of course, we have also enjoyed the support of the European Copper Institute. So, if we go back to the report and to the methodology of the report, the methodology is based on two main concepts. On the one hand, the required tariff for the PV investor, and on the other side, the reference price in the local electricity market. So the generation parity will be found when these two concepts match. Explaining this concept in a more detailed way. The required tariff, as you can see in this slide, is calculated at the theoretical rate with which the PV investor would achieve at least the minimum profitability sought in order to build the PV plant. Or in other words, the PV sponsor will only invest his money if he receives at least the required tariff for the PV production. And in order to calculate this required tariff, it's necessary to model the economics of the project. And for that, we have considered, of course, real market data for the initial investment, for the operating expenses, and for the debt status. So we have only one remaining data necessary to complete the economics of the project. The unknown of our equation would be income. The income depends on the required tariff and also the PV production of the PV plant. The PV production can be accurately modeled with irradiation data, so our only unknown is the required tariff. We have to consider also that when investing in a merchant plant, PV investors will ask for a specific IRR, the so-called cost of equity. And this cost of equity is specific for each country and for each kind of plant. If we have this cost of equity and all the data that I have mentioned, we can calculate the required tariff for this plant and for each market. Remember that we have a required tariff, but we have also a rate, something to compare, and this would be we have called it the reference price. It would be as a benchmark of the potential income that a PV IPP could obtain from real market in its considered country. So in this regard, the following market prices can be considered as a good reference. Marginal prices of the day-ahead market and also price of PPA contracts. But as you will know, PPA prices are not always easy to obtain as no public information is available. So the GPM report selects between these two alternatives as the practical simplification. A marginal price where possible, and this will be the case for Chile, Mexico, Italy, Texas, and Turkey, and also a regulated tariff for large consumers. This would be the case for Morocco. So we have considered, and remember, this is only a working hypothesis, a practical simplification, as I have said. We have considered that in countries where no spot market exists, it has been, the regulated tariff for large consumers could be considered as a theoretical upper boundary of a PPA contract. We can summarize the main results of the report in this figure, where we are comparing the required tariff and the reference price for each market in 2014 and 2013. The red dot would be for 2014 and the blue one for 2013. So you can see in the figure that only Chile is in a full generation parity situation, although Morocco, Italy, and Mexico are or have been close to generation parity recently. On the other side, we have Texas, the Texan and Turkish markets, which are far away from generation parity, but it is worth to mention that one of the lowest of the report, below $100 per megawatt. So if we analyze each market one by one, the first of all will be Chile. As we have mentioned, Chile is in a full generation parity situation, and we have analyzed a specific spot, Diego de Almagro, in the Atacama region. The Atacama region is in the interconnected system of the center, in Spanish, the SIC market. In Chile we have 4 different markets, and well, we have chosen this one, which is very representative for the country. And well, you can see in the figure that reference prices are clearly above the required tariff for a PV investor. And both high electricity rates and extraordinary radiation levels contribute to this generation parity in Atacama region. And it is true that the SIC market has presented high volatility rates in the past decade, but the PV tariff, the required tariff, offers a wide margin to absorb potential decreases in the spot market. In fact, we would need to go back to 2009 to find spot prices below this required tariff. So we feel very comfortable with the Chilean situation, and we think that this generation will be maintained in the future. The next country we are going to talk about is Italy. We have analyzed the Lazio region, and as you can see in the figure, in Italy, or at least in this region, PV utility scale generation is not currently competitive in the spot market. But it is worth to mention that in 2013, the situation was not so negative, and the generation parity was closed. But the spot prices in the Italian market have decreased 7% annually over the past 5 years, and these clearly have impacted negatively the generation parity situation. And moreover, the country is presenting a high cost of equity and specific taxes for electricity generation, which are the main barriers to the PV development. However, the appetite of financial institutions in the Italian market is recovering. So we have positive expectations with this market, and we hope that the situation will change in the following market. So it would be necessary to monitor this country. In Mexico, where we have selected the Sonora region to conduct our analysis, the generation parity was reached in 2012 and 2013, as you can see in the figure, but the generation parity is not reached nowadays. You can see that the reference prices have decreased consistently in the past 2 years, and so the generation parity situation has turned upside down. It is worth to mention that Mexico is there is an energy reform on the way, so the evolution of the wholesale market prices is uncertain. But we consider that with this required tariff, the generation parity will be possible in the next years. So we strongly recommend to regularly monitor this market. In Morocco, if you remember, every country, we have considered a spot market in all countries but Morocco, where we have considered a regulated tariff for large consumers. And well, as you can see in the figure, generation parity is close, and this situation is very consistent. So we have analyzed the Warstate region, which has very attractive irradiation conditions. And these high radiation levels and the continuous decrease in PV prices have almost compensated for the subsidized rate. The regulated tariff in Morocco is, as I've said, a subsidized rate, and the government has designed a tariff increase until 2017. And this will push significantly generation parity proximity. So Morocco is another country that should be monitored in the following years, because we think that in 2 years, before 2017, when this tariff will be higher, generation parity will be possible in the country. In Turkey, we have analyzed the Karaman province, and you can see in the figure that PV technology is far from being competitive. This is because the weakening of the Turkish currency against dollar, which has raised prices of imported PV items, and also high CPI rates. And well, we don't know if this situation is going to change in the long term, but of the report, maybe Turkey would be the less interesting country that we have analyzed for PV production. For PV production for utility scale segment, I remember. And the last market we are considering, the Texan market, although Texan required tariffs, if you remember our chart, the chart that summarized all of the report results, the Texan required tariff is very attractive, below $100 per megawatt. But PV generation parity is still distant. This is because the ERCOT market presents very low reference prices. So the positive impact of the ITC and low discount rates do not compensate these prices. However, with a growing trend in the electricity rates and a decrease in PV tariff, we expect that the Texan situation would change in the short term. And moreover, this rate is so below $100 megawatt could allow, for example, PPA contracts with private consumers. So we shouldn't eliminate taxes from our mind when considering PV generation in utility scale segment. The main conclusions for this report would be, of course, that Chile is in a full generation parity situation, and PV generation for utility scale is competitive and it is possible nowadays in the country. But also Morocco, Italy, and Mexico are or have been closed recently. You have to consider that given the volatility in wholesale markets and the fast decline of PV prices and of course ongoing regulatory reforms, PV utility scale competitiveness should be recurrently monitored over time. As we have said, PV generation can change from 1 year to the following year, for example in Mexico or in Italy. So we have to keep in mind that we have to monitor this generation parity situation and local electricity prices. And of course, the fact that generation parity has not been reached in the country does not imply that utility scale PV plants will not be built. For example, a renewable portfolio standard or a feed-in tariff or maybe a convenient PPA could trigger the market, the PV market. As we have seen in Texas, for example, a tariff below $100 per megawatt could allow a PPA contract with a private consumer, although this PV plant could be will not be competitive against conventional technologies in the spot market. You must remember that the required tariff in this report is calculated based on the economics of a PV plant under a project finance scheme, and of course we could choose other forms of financing, for example bonds for utility companies, and this could significantly improve generation parity results. And new countries, for example, Central America, we think that Central America would be very important in the PV development in the short term. And of course, different financing schemes for PV installations will be included in the 2015 issue of the GPM for utility scale segment. So I hope you have enjoyed the presentation, and now my colleague Davide is going to talk about the following GPM report and the following date you have to consider for the launch of this report.
Thank you, Carolina. Good morning and good afternoon to all participants. This is Davide Sabatino. I'm the product manager of GPM reports. Thank you for participating, and thank you for GPM sponsors. Well, I'm going to show you the planning of the GPM reports for the next month. As shown on the table, we are publishing on November 2014 the third issue of the GPM report dedicated to the residential segment. Then, on January 2015, we are publishing two special editions dedicated to Mexico and Chile, where we will analyze the three segments, residential, commercial, and utility scale in the countries. On March 2015, we will publish the second issue of the commercial segment, and then on July, the second issue of the utility scale segment. If you are interested in sponsoring this upcoming issue, please contact me. Thank you very much. Goodbye.
Okay, so thank you, Carolina, David, and Davide for the session today. We will go now for questions and answers. So now we invite our audience to submit your questions through the Q&A window. So please just type your questions there, and we will try to answer one by one. Thank you very much. In the meanwhile, as for the time being there are no entry questions. Do you have any plan to assess any country in the Asian region? Is there any interest in there, as we might have audience from this region of the world? Thank you.
Yes, we are, I mean, the countries we select to include in the reports are those which we think are going to yield more attractive results. Probably over the next issues, mainly the commercial and the utility scale reports, Middle East and probably North Africa countries would be included. Regarding Asia, we may also include other countries, like for example we've been thinking about Thailand or China, even Korea, to include in the Israel as well in the report. And I think we're going to see some of this in the reports of the following year or so.
Okay, good. Thank you very much. So let's go for next question. So, one moment. Yes, so a question from Luis Torres. Wholesale market has a lot of volatility. How can we manage this issue with PV generation? Thank you.
Well, I mean, wholesale markets are volatile. This is something we know. This is something that has to be managed not only by PV generators, but also by all technologies. In the report, what we do is we give a long-term view of the market. Of course, this is retrospective. We include, 5 years or something, 5 or 6 years, so that the reader can have an idea of what we are in terms of market volatility. If we think about volatility towards the future, of course, this is something that we don't take into account in the report. What people do essentially is, well, investing in a merchant plant if prospects of price level are reasonable, and also when let's say that the buffer between the required profitability and the actual price is wide enough. This is what we've been seeing in the future. Of course, a PPA could also be an option, but then it wouldn't be a merchant plant.
Okay, thank you very much. There is another question. We have seen a lot of new taxes levies for generation and even more for renewable energies. How are you going to model this risk? Thank you.
For the moment, we don't take into account potential future risks. What we do is we model what we see nowadays in the market. However, we have to take into account that in some cases, for example, I mean, probably we are going to state clearly whether things like, for example, the backup tariffs or in Spain, tarifa de respaldo, are included in our analysis or not, because it could be seen as a, let's say, artificial way to make more expensive the PV option. So we need to see country by country, and whatever we do, it will be clearly stated in the analysis.
Okay, very good, thank you. There is another question. What do you think about proposal from companies to go to the market without any feed-in tariff? For example, Spain. Thank you.
Well, I mean, these proposals, I guess you mean the plans or the announcements that have been around regarding merchant plants. Well, I mean, I think the answer is the report itself. I mean, we think that in some countries, merchant plants make sense because they are profitable and they could compete against other technologies, and they could make a good job in the market. I think that replies already the answer, the question.
Mm-hmm. Okay, thank you very much. I think that this stage there are no further questions left. So yes. So we will hereby close the session, adjourn here. So thank you very much to the audience for being here and asking your questions, for your interest. Thank you to our speakers today, and I will give the floor to our speakers to close the session. Thank you.
Thank you very much.